Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and I'm 1 minute late, around 7 a.m. Eastern Standard Time, June the 17th. Okay, before we get into it, let's talk about tonight. It's Thursday. Everybody's somewhat favorite night of the week because there's always Sunday night as well, where we go live. Live tonight, 6 p.m. Eastern Standard Time. Join us here on YouTube. Click that bell button to get notified of when we go live. We're going to be going over the weekly charts and doing a deep dive into the weekly price action, because Thursday nights is when we begin to analyze what we're going to do next week. So join us for our strategy session. We'll also take some requests from the audience on stocks they're interested in. And to be honest, today is going to be a very, very interesting day because the markets are way down this morning. Not way down. They're down this morning. The gold markets are way down. The question is, how do they close? Do they shrug off this ridiculous Fed announcement yesterday that everybody's in a hissy fit about? Or do they wake up and realize there's nothing there? Their dot plot indicates that they may, or they have some members that want to raise rates in 2022, 7 members. The probability, if they do raise rates, it's going to be 2023. All the while, you have inflation in fuego. What the markets did not respond to yesterday, with the exception of the gold market, which continues to sell off on inflation data, and they bid the dollar. The import-export numbers yesterday were very, very hot, and you cannot blame COVID, because month over month, the May number was up way more than expected. So inflation is here, yet the Federal Reserve now is doing nothing. Don't listen to what they say, look at what they do. If we've learned nothing more about the Federal Reserve over these past years that I've been on YouTube, don't listen to what they say, look at what they do. They scotch, and believe me, as I did last night, thank God we have shorts on. If you sit back and you take a look at the statement, and you realize that they're not tapering their balance sheet. They are building their balance sheet. They didn't back away. $120 billion per month is not going away anytime soon. So the balance sheet continues to build up. The spending is going nowhere fast. Yet we're supposed to sell stocks, and we're supposed to sell gold due to the fact that they may raise rates in 2022, and probably if they do in 2023. I'm sorry, there's something wrong there. There's something very, very wrong there. So yeah, they're selling gold this morning, but that's this morning. Let's pay attention to where it closes. That's what really matters. Because at some point in time, people need to start looking through this fog and saying, there's something very, very wrong here with inflation grinding higher, yet the Federal Reserve is doing absolutely nothing. NASDAQ. Back to the NASDAQ anyway. We're off the lows, as I mentioned earlier. And we closed off the lows yesterday. We sold off after hours. So either you had the plunge protection team in there bidding the markets off the lows, excuse me, my voice is going again, or you had buyers in there realizing that there's nothing to this statement. Even the Federal, even Jay Powell backed off of the dot plot concerns. His words were exactly, take the dot plot with a grain of salt. Don't worry about it. Don't look here. Go about your business. Go buy stocks. Blah, blah, blah. Okay, so We have broken out. This is a 1 hour chart. Broken out. We have a short position on here. You know, I would love to make a call where I believe the markets are going to close today. I can't. There's just too much. There's too much emotion out there, and these algorithms. The minute they saw the dot plot change, they dumped the market hard. But let's see whether or not the corrections are made today, and they close this market up higher. Even the S&Ps are coming off the low, down not even a 1/4 percentage point. And we're breaking out. We have a little bit of a W formation going on here. And we're breaking out. This is a 1 hour chart though. When did we open this up? 8 minutes ago, so a lot can happen. The Russell 2000, of which we are also short, down this morning, just shy of a 1/3 of a percentage point. Again, we were lower. You know, I would love to speak my book here and say, wow, the markets are going to crash. I don't think that they're going to. I don't think that they're going to yet. If they would have raised rates or said that in the fourth quarter, 2021, we're going to be either A, rolling off debt off of our balance sheet, or the probability, according to the dot plots, of raising rates is imminent, you would see the markets tanking. But they kicked the can down the road. And how that's not seen as being other than kicking the can down the road, what they did yesterday is mind-boggling. So I think that the so-called professionals out there are going to get their heads handed to them for having too much emotion based upon yesterday's announcement. That doesn't mean we're not going to see a correction here. I just don't think it's going to be the massive correction that everybody's looking for. And again, I want a big fat correction. That helps me. US dollar. Now the dollar just skyrocketed yesterday. Now what I do want to point out is that on a daily time frame, the dollar closed out the session yesterday above its 3rd standard deviation Bollinger Band. They're going to gap this thing up again today by 3/4 of a percentage point. So clearly, we are going to be at nosebleed overbought levels using the Bollinger Band. Let's see whether or not, do I have the 3 standards set up on the daily chart? Yes, I do. So here are your 3 standard deviation Bollinger Bands. Okay? You're not supposed to be here. For those not familiar, you're not supposed to be there. The last time we were up here was, actually no, that's not the last time. Christ, on this chart, it doesn't even show the last time we were up here. That's how rare it is. So I expect at some point in time today that we're going to see some, let's call it a come to Jesus moment by people that are bidding the dollar and realizing that they're chasing a ghost. And the dollar is going to pull back either today or tomorrow. Does that mean that the rally is over? No, that not necessarily. It just means that this rally here is unsustainable. Where are we at on RSI? Let's go to a 4-hour time frame. Here's where we're going, right here. Put it on your calendar. 91.95 on the Dixie. RSI was as high as 83.5 roughly. We're back up there. Potential double top on the dollar. Stiff resistance at 92. A shockingly strong rally here. We didn't dismiss it. The daily chart looked pretty good going into yesterday's Fed announcement, but we're going to need to see a pause here at some point in time, either today or tomorrow. Now, if the dollar is rising, that means that gold is probably getting clobbered. It has bounced back. So the last time I looked, we were with a 17 handle on spot gold, and we've bounced back a little bit. We're down, wow, nearly $61, or just over 3.25% on the session. So gold has broken support, at least in the pre-market. Again, it doesn't matter where we trade intraday. What matters is where we close. Now, taking a look at, this is a 4-hour chart, mind you. Taking a look at RSI, possible higher lows. So we're looking for a breakout here on RSI. For those folks just joining in, please join us tonight, 6 p.m. Eastern Standard Time. We're going to go live and go over the weekly charts, and we're going to begin our analysis of how we want to be positioned moving into the new trading week. So click that subscribe button to get notified, or there's a link below to our opt-in email list. Silver down 4%, really taking it on the chin. Well, we're right at support, right there, 26.56, where we just bid. And it's coming off now, coming off the lows. What else do we want to go over? What else do we want to go over? Bitcoin. Bitcoin, wow, Bitcoin's up. And I've gone over this, you know what, I'm going to do it tonight too. I haven't done it in a while. I've shown in the past how Bitcoin is correlated with inflation using the CPI and the, what other index? There's another inflation index that I picked out. And I showed on 2 separate indexes how Bitcoin rallies with inflation. I'm probably going to go over that tonight on Thursday Night Stock Charts Live, just to illustrate, because right now Bitcoin gets it. They're getting it. They're bidding Bitcoin off the lows, up over 1.75%. No breakout here yet. We're still struggling at resistance levels, but it's not down. Oil, the whole commodity spectrum is down. Oil down 0.43%. Possible double top here with no break yet to new lower lows. Now, if we do break to new lower lows, watch out for the transports. Beware. Here's your lower low. As it stands right now, we're in a wedge formation with an eye to a new break to the downside. I would not short it. Yet, anyway. Yeah, JW. Yeah, the transports broke down about 3 or 4 days ago. Here, let me bring it up. Where are they? Here. They broke down on June the 10th. They tried to rally back, failed. Continuation breakdown yesterday. RSI is very weak. Lower highs, lower lows. Volume hasn't been that poor, though. Not too bad. But when you take a look at it on a weekly time frame, as we're going to do tonight, you know, this is all sorts of bad. But remember that last Thursday when we were live, what I always like to say when we're on Thursday Night Stock Charts Live, when we're talking about the weekly charts, is that we have one more trading day left to go, meaning Friday. A lot can happen here. Now, this time last Friday, we were trading down below critical support, but by Friday, we had bid back up to close above resistance or support at that time. We're back down again, and we do have a new weekly low. I don't think we're rallying back on the transports, at least by the end of business tomorrow. But I could be wrong. You always got to be open-minded. So yeah, good point, JW. Tommy, Bob, can you check RSI on gold and the stochastic indicator? Sure. I'm assuming the daily chart. What the heck just happened? That's not yesterday's price action. Let's go over to all right, before we leave here, both, excuse me, folks, my throat is going, my voice is going. RSI, RSI and daily Stokes are very weak. And you may be saying, you know what, they're nearing 20 and meaning the Stokes anyway, nearing 20, and they're probably going to be oversold soon. This is when really the damage gets done. So this has got to be a bad tick here. This is not right. This bid back up to close positive yesterday. That is inaccurate. Let's go to GLD. Yeah, that's more like it. So this is how we closed yesterday. I knew that spot gold price is inaccurate. So the Stokes are, yes, they're oversold, quote unquote oversold, but that doesn't mean we're going and buying right now, because what we really want to see is what you usually get is a kind of a W formation and a higher low on your Stokes and sometimes a lower low, but a W formation nonetheless. Sometimes you get a V shape, sometimes you get a U shape, but by and large, you're getting some sort of a W formation. We're not there yet. We have some additional downside on gold. You know, maybe we rally back to close positive today. Is that when we buy? Probably not. I'd like to see a dead cat bounce and then a pullback and a validation, a retest of the lows. And that's how you get your double bottom setup on your stochastics. We're not there yet. We already have a sufficient position in the gold miners, silver, where I don't want to go buying a falling knife. It's just, it loses, average losers. So we don't want to do that quite yet. We'll average a position when the setup is accurate. Right now, we're not there yet. I'm expecting a dead cat bounce. Let's face it, we closed down yesterday on gold down below the third standard deviation Bollinger Band. It's not supposed to be there. It's not going to remain there. It's going to pop at some point in time in the very near future. Is that the bottom? We don't know. All this implies, meaning this line in red, is that you're going to get a bounce on gold. That doesn't mean it's the bottom. And when you take a look at the US dollar, the dollar yesterday, as I mentioned earlier, it closed out the day yesterday well above its third standard deviation Bollinger Band. Is it going to stay there? No, it's not going to stay there. It's going to pull back. It's going to correct. Is that the high for the US dollar? I don't know. I'm not that smart. So we want to be humble right now. We want to take a higher level view of the battlefield and what the Federal Reserve did yesterday, which is absolutely nothing. They did not raise rates. All they did was prep the minds of traders to get ready for a potential rate hike in 2022, probably 2023, if they're serious at all. All the while, they continue with $120 billion worth of treasury buying every single month. That remains unchanged. That's what they're doing. That's what I'm focused on. So we're going to weather the storm here. We'll sell covered calls. We've already sold covered calls on our NUGT position. Those will expire worthless. I may resell them into next week again as well. And with that, folks, I'm going to sign off. Everybody have a really profitable trading day. Please join us tonight, 6 p.m. Eastern Standard Time. And just be careful of catching a falling knife here. You know, I don't believe that we're in for a real serious correction, but we may. And I'm short. I'm not overly bullish on the market. But I think that the interpretation of yesterday's Federal Reserve announcement was way too emotional. And I think that we're set up here for a whipsaw in the market. And I just don't want to see anybody lose money because they're chasing a market lower that is just being completely irrational right now. So with that, folks, have a great day. Talk to you soon. And hopefully tonight, 6 p.m. Eastern Standard Time here on YouTube. Be well.